My name is Gorman, and in this episode of Semilla.VC, I talked with Carlos Simonsen. He's the co-founder and managing partner of Upload Ventures. He's also a senior partner at São Paulo-based private equity firm CapSur and Corton Capital. He previously worked at Avant in Chicago and for 3G Capital, where he worked on the Kraft-Heinz merger. Carlos earned a master's in industrial engineering from Columbia University and a bachelor of industrial engineering through a dual degree program between the Federal University of Rio and Means Paris. In this episode, we discussed why Carlos decided to move from working in the United States to Brazil to found Upload Ventures, Sao Paulo as a Latin American tech and venture capital hub, financial risk associated with governmental change in Brazil, the growth equity industry in Latin America versus the United States, and why Carlos believes it's easy to do business in Latin America. We discussed all this and more in this episode of Semilla.VC. Okay, Carlos, could you start by telling the audience a bit more about your work history up to and including your current role at Upload Ventures?
Sure. I started I did my undergraduate studies in France for about 3 years. Graduated, went to IB in New York, spent less than a year, went to Columbia, MSc in engineering. So the Mud Hall in Columbia and New York City. After New York City, I briefly worked at AB InBev as an intern / analyst. I was more of an analyst. And at that time, I met the 3G Capital guys who were on the process of buying Heinz. And I worked briefly in New York and then went to the office in Pittsburgh when the restructuring of Heinz was undergoing. So I from late 2013 until mid 2015, I lived part-time in New York, part-time in Pittsburgh. So that was an experience because Pittsburgh is a very different town in the US, very remote. But it was great for me to see how a true restructuring is done by a major private equity fund. And I work in different roles, including FP&A, treasury, M&A, including my history also in Kraft-Heinz. At the end of 2014, we were already discussing the deal of Kraft, which was a merger with Kraft, an $89 billion merger with Kraft. And my role was to support and to support essentially the deal team, which was spearheaded by the 3G managing partner, and to go over all the possible synergies between Kraft and Heinz. The deal was announced in late March that year, and we closed the transaction in July of that year. The day we closed the transaction, I moved from Pittsburgh to Chicago without ever going back to Pittsburgh. And then I lived in Chicago from 2016 until 2019. I left Heinz in 2017 when the merger with what was the company again? Unilever. They tried to buy Unilever. That didn't work out, and the company wasn't growing because the way they compensated people was basically they issue stock options, and the stock needs to grow for you to have a higher exercise price. So with Unilever not being an option, it didn't make sense to stay. So I left the company in 2017 to work in a fund that started as a venture builder called Avant, and Avant had a private equity arm, and this private equity arm had Allego Energy inside of it, and Allego Energy invested in portfolios of energy companies. So essentially, it bought energy companies, it bought contracts of cities in the region of Chicago in the Midwest. So it was a straight up buyout strategy. At the end of 2018, there was a big shift in the government in Brazil. I was already trying to build my own firm either in the US or Brazil, and Brazil seemed less competitive. And my case proved right when I came back. So I founded with Mario Moraes, he's my business partner for a long time now. We founded CapSur Capital. There was another person in CapSur Capital as well. We had this person leaving, and we rebranded to Corton Capital. And the idea was that there was lack of capital to do growth equity investments in Brazil. There's a lot of capital to do seed and Series A, but lack of capital to do growth investments in Brazil. So our first, our most famous deal, let's say in the growth stage, was Niue, buying Niue from the founder and selling it to B3, which is the stock market of Brazil. Works exactly like the Nasdaq. And we did that between 2020 and 2021. There was like a major, it was the rockiest deal I've ever been involved in. It was my first, let's say, special situation slash growth deal in Brazil. We also led the Series F of Loggi, the delivery company. It was a straight up primary round, Series F, the biggest e-commerce delivery tool or service, if you want, in Brazil. We, as Corton Capital, we've invested in the primary, we've invested as major shareholders, major investor of OLIS Series E round. We were the second largest institutional check. And between last year and this year, 2021, 2022, we negotiated a secondary round in wildlife. At that time, we were the early stage team of SoftBank was being carved out of SoftBank, and they didn't have a late stage strategy. So me, Mario, and two other members of the team joined the early stage team of SoftBank, and together we form Upload Ventures, which is a full stack firm for both early slash seed and Series A, and then we do SPVs on the growth stage. We don't have plans yet to do growth, a full stack growth fund, but it's in the roadmap. We also have a bucket for special situations. It depends on market conditions. The market it's slower this year, but we are adapting to this by meeting with great founders and having access to the best deals. I think the whole power law in VC is to have access to the best people and to support the best founders in developing their businesses. So we try to position ourselves as a Sequoia or benchmark. We're not there yet, of course, but we are becoming more and more specialists in verticals that we like, such as B2B software, productivity, health tech. We have one investment in social media. We are also becoming specialists in the gaming sector. I myself led the wildlife deal, and I learned a lot in the process. The gaming industry is very different from everything else that I ever learned, and it's instant distribution to billion of devices. It's very competitive, but at the same time, it's a high margin business. So you have kind of a de-risking going on with when you invest in gaming. I'm not talking about this whole NFT Web3 play. I'm referring to the straight up publisher / platform play.
So I want to talk more about Upload Ventures, but first, a quick follow-up on something you said that's quite interesting. You mentioned the change in government that happened a couple of years ago and how that affected your decision to maybe start something in Brazil. Could you talk a little bit more about that?
Sure. So Brazil shifted from I'm not political or anything, just a more capitalist government was that was the thesis back in the 2018 election. I'm not sure if that changed now. The deregulation that was taking place at the time was very interesting to me. And the main byproducts of this deregulation were essentially fix the instant payments of the central bank that changed everything for a lot of people, and the level of the bank population just took off. The second thing was the social welfare reform that put our public debt into the right trajectory. Of course, the pandemic maybe derailed that a little bit, but at the end of the day, I don't want to have a view of the president or anything. It's just like that. In Brazil, you have it just have so much to do and so much to explore. And it's believe me, I know it's less competitive than the U.S. The U.S. is like the Champions League, and we're playing high school t-ball here. And at the end of the day, is it's you know, a new bank. It's a fund returner. We're looking for opportunities like this all over the place. We scour the market. We have more than 2,500 companies in our pipeline. So yeah, we have our hands full of pipeline. Both on the seed stage is more even so. On the late stage, we have around 450 companies and we cover about 200 of them. So this year it's tougher. It's a tougher environment, but overall, because of the elections, the World Cup, etc. But at the end of the day, we are very happy of what we're building, and building a business that's possibly going to last the next 30 years.
Yeah, let's talk more about Sao Paulo as a tech city. How would you compare it to other Latin American tech hubs? It's usually, you know, it's up there with Mexico City as 1 and 2. Some maybe you might put it as number 1, but
Look,
how would you discuss them?
So I cannot compare São Paulo to Mexico City, because Mexico City is one very close to the U.S., so it has like a natural like geographical influence. We do not have that. So when you look at São Paulo was all built in cash, not in debt. So it's a very different perspective in Brazil, where you don't have like a very robust credit market. It's starting to have now, but you didn't have for the past 100 years. So and the other thing that I do like about São Paulo is that not only its size, but everyone from Brazil comes here one way or another. It has it's like a rite of passage. I'm from Rio myself, like, and then you have people from the Northeast, people from the South, and you have this like melting pot of ideas that enable innovation, that can enable a lot of exchange.
Continuing on, are there non-Portuguese speaking VCs that you're working with that live in Sao Paulo, or either English speakers or Spanish speakers? And how big is that language barrier for those non-Portuguese speaking workers in this industry?
I think like what we try to do is we have strong relationships with U.S. funds, and we know the funds that are going to be long-term capital partners with us, as opposed to helicopter VCs that come and go. So I don't want to like point any fingers, but we do have a list of funds that we work together to on a basic. We do have touch points on a monthly basis with major U.S. funds. So I think it's less of a geographical barrier of those VC funds do not need to have a presence here, but they count on us for deal flow, and we count on them for expertise, right? And U.S. go to market. So the way we differentiate ourselves is to have companies that are built in Latin America, either Spanish-speaking Latin America or Brazil, that can have a global presence.
What has been your most successful investment and why?
On the early stage side, we have very promising companies. Some companies are growing a lot. I cannot disclose numbers, but our latest investments in Mexico have been very good. Our main software investment has been taken off in the US. And on the growth stage, we have the biggest mobile gaming publisher in the world. We have a little bit less than 1% of the company. And we have Olis, which is the biggest reseller in Mercado Libre, which is the Amazon of Brazil. And the most successful on a pure return basis has been Newegg due to the timing of the investment. We spent maybe 7 months holding the asset, and it was a home run for us from a return point of view. But we expect to make a typical similar returns with the other growth companies.
So we were discussing the politics and the changing in administrations and how that affects investment outlooks. Without divulging any of your own opinions, which it's clear you might not want to do, and that's totally fine. Who do you think will win the election? And more importantly, what would you say to kind of American or Western investors that are worried about sociopolitical risk in a country like Brazil, where they're worried that as soon as the administration changes, maybe their investment would go to zero?
Look, the main difference that I see is that you should look at Brazil differently from Southern American Spanish-speaking Latin because of its population. And Brazilians, I'm not trying to be funny or anything. Brazilians, they want to get rich, right? So they have. It's not a socialist country by all means, right? So if you have like a Lula or a Bolsonaro, at the end of the day, it doesn't really make a difference, right? The financial markets are very, very developed. You have open banking in place. You have PIX, which is the Fed Now program that is being copied from Brazil. And the fintech revolution started here. So for new entrepreneurs in the US, I would just say like, come here if you want to, a bonanza. For US funds, I would love to co-invest with you if you have expertise in the US that is complementary to mine in LATAM. And I think the ecosystem for VC, venture capital, and private equity as a whole is way more robust than 10 years ago. So my message to foreign investors is that Brazil has less competition. We have our own technology. We need external capital. Please come here to invest. We can be mixed up with Venezuela or smaller countries. It's very different. Most of founders that we see here are highly educated, mainly in the US. And yeah, at the end of the day, the addressable market is what's going to make your strategy return hefty profits.
There's a huge addressable market in Brazil. You're completely right about that. I'd be interested to know, previously when you've mentioned American investors and American VCs, they are like based in America. Are there any Americans that are living in Sao Paulo, a part of the growth equity or early stage investment VC communities, or is it basically just Brazilians who've decided to join that industry?
So we do have some Americans that work in the companies and some Americans that work as advisors to those funds, but I'm not aware of investors other than like partnerships such as Redpoint and eVentures here in Brazil that happened in the past. Headline, things like that. But having boots on the ground adds a lot of value to deal flow and sourcing. What we usually do is we exchange more with American VCs that want to spend some time in Brazil. So we do have partnerships with San Francisco funds, Valley funds, and one in Los Angeles.
Okay, so finally, I have to ask Peter Thiel's famous contrarian question, but with a uniquely Semilla.VC twist. What important truth about Brazil or Latin America do very few people agree with you on?
That is easy to do business. Very few people agree with me in that. But we have right now, just for context, a company that just took off in Brazil. Like in their market, they have a 90% market share. In the US, they are struggling a lot more. So it's just a question of how well you execute. You have the same tools and internet and internet and everything that comes with it, like ERP, banking as a service, whatever, enables local businesses. So it's not as it used to be, right? Things have changed. They are way more robust, and you have a never larger software demand.
Carlos, thank you so much for taking the time to come on the Semilla.VC podcast today. I very much appreciate your time.
Sure, I appreciate it, Trip. Let me know if you need anything else.
Thank you for watching this episode of Semilla.VC. My name is Trip Gorman. Don't forget to like and subscribe wherever you view the podcast. And don't forget to check out our newsletter, Dealflow LA, which can be found by going to dealflow.la.